Have you ever wondered what a Bitcoin ETF is? Well, let's unravel this mystery together. ETF stands for Exchange Traded Fund, and when we talk about a Bitcoin ETF, we're discussing a fund that closely follows the price of Bitcoin. Now you might be wondering, how does that work? It's quite simple, really. Investors can buy shares in this fund, and these shares represent ownership of an underlying amount of Bitcoin. So in simpler terms, a Bitcoin ETF allows you to invest in Bitcoin without actually owning any. Now you might be asking, how does a Bitcoin ETF work? Well, let's break it down. A Bitcoin ETF operates by utilizing a custodian and purchasing Bitcoin. The custodian, often a reputable financial institution, holds the Bitcoin securely. This is a crucial role as it ensures the safety of the Bitcoin and provides a layer of trust for investors. But where do the ETF shares come into play? Here's where it gets interesting. The custodian creates shares that represent ownership of the Bitcoin they hold. Each share corresponds to a specific amount of Bitcoin. This process of creation is what forms the Bitcoin ETF. These created shares are then traded on traditional stock exchanges, just like shares of companies. This means, as an investor, you can buy and sell shares of the Bitcoin ETF as you would any other stock. You can do this without having to deal with the complexities and security issues of purchasing and storing Bitcoin directly. In essence, a Bitcoin ETF simplifies the process of investing in Bitcoin. So, who should consider investing in a Bitcoin ETF? Well, Bitcoin ETFs are particularly appealing to investors seeking exposure to the world of Bitcoin without the technical challenges of owning it directly. This can be a great option for those who aren't tech-savvy, who do not wish to grapple with digital wallets, or for those who simply prefer the familiarity of traditional investment methods. However, it's crucial to remember that, like all investments, Bitcoin ETFs carry their own set of risks. These can include the volatility of the Bitcoin market, regulatory changes, and the performance of the fund manager, among others. So it's essential to consider these factors, along with your own financial goals and risk tolerance before diving in. Furthermore, investing in a Bitcoin ETF should not be your only investment. It's always wise to have a diversified portfolio to spread and mitigate risk. This means investing in a mix of assets like stocks, bonds, and other ETFs, in addition to Bitcoin ETFs. Remember, a Bitcoin ETF can be a convenient way to gain exposure to Bitcoin, but it's not without risks. Always do your due diligence before making any investment decisions.